Hello, hi, good morning. Okay, so sorry. Today, I just sent you guys a video. So the today's topic is monetary system because this is our last class. I have something to do very important, so I need to only send you the video for this week. Okay. Okay. So our topic today is the monetary system. Okay. Before we start, what is the meaning of money? What is actually money? You can see here, money is the set of asset in an economy that people regularly use to buy goods and services from other people. So you can see now, money is now actually, you can say, one of the asset. How you want to measure your asset? Okay, by having more money. So this money, normally people use to buy goods and services. Whatever things that you want to buy, okay, you must use money. Okay, before the existing of money, we used to have what we call as a barter system. Okay, I guess you guys were familiar what is actually barter system. Before existing of money, people before use a barter system. What is actually barter system? Okay, before I start what is actually barter system, let me explain a bit what is the meaning of money. Okay, beside this meaning, okay, money is actually a current medium of exchange in the form of coins and also banknotes. Normally, when you have money, normally is in the in term of in the form of banknote. Okay, duit kertas and also coin, duit shilling. Okay, and other words for money we can see as a cash. Okay, we can say as fund and so on. So I can say that money is actually very important nowadays. Okay, let's proceed to the barter system. What is actually barter system? I guess you guys know, right? In Malay, barter system we call as you exchange, you tukar barang yang sama. Okay, tukar, sistem penukaran barang. That's a barter system. Okay, so system is actually a system of exchange where the participants in a transaction directly exchange goods and services with other goods and services without using the medium of exchange, without using the money. So if you have, for example, you have this one maybe butter. Okay, you want to exchange with the bread. Okay, so you must ensure that these people have butter and these people have bread, so you can exchange. So this is actually the exchange. Okay, in order for you to exchange butter, you want to exchange bread. Okay, so because of there's a few problem occurs with this barter system. Okay, that's why they introduce money. Okay, what are the problem occurs in the barter system? We go one by one. First, the barter system problem, they are requires a double coincidence of needs, or because you can say as lack of double coincidence. Okay, lack of double coincidence. Okay, what is actually this mean? Okay, double coincidence is mean like this. When one person, okay, want to sell and buy, okay, they must consider with what other people buy and sell. It means that the fulfillment of the mutual wants by buyers and the seller is known as a double coincidence. Example, you want bread and I have butter. Okay, when this happen, then you fulfill the double coincidence. Okay, normally with the system barter, it's going to like lack of double coincidence. Very hard for you to fulfill your needs of both buyer and seller. Okay, so you must have this double coincidence in order for you to proceed the barter system. Understand? Okay, I hope you understand. So this is a double coincidence. Okay, next the second. Okay, let me. Okay, now we move to the second point, which is a determination of the exchange value. So in system barter, okay, this one, in the barter system, there's no common measure unit of value. So even if the buyer or seller of each commodity happen to meet, the problem rises what the proportion of two goods are to be exchanged. Okay, it means that you can still do a barter even though the value is not same. Okay, example, okay, if A barter A person, if A they want wheat and B have rice. So when this happen, this is very difficult for you to decide how much wheat is needed for the exchange of 1 kg rice. Okay, how much wheat needs in order for you to exchange 1 kg of rice. That's why it's like we can say lack of a common measure of value or determination of the value, exchange value. So it's very hard for you to measure the value of that things that you want to exchange with. Okay, next, limited buyer choice. Okay, this limited buyer choice is mean that you can only exchange what you need, and you must find someone that have what you need, so you don't have a lot of choice. Okay, because you just like, I just want to change butter with bread, for example. Okay, if you use nowadays, if you have a system butter, if nowadays we still have a system butter, bread, you tak boleh you cannot choose within Gardenia ke Massimo ke, you just focus on one thing, so you don't have any choice. Okay, what that person have, that's the only things that you want, and you have that things that they want. For example, you have butter, they have bread. So now if you have money, you can just choose any kind of bread you want. But for example, that person only have Gardenia, but actually I want Massimo, but because because I really want bread and I have the butter. Okay, so I just take that bread even though it's Gardenia. That's a system butter. They are very limited buyer choices. They don't have choices. Next is difficulty deferred payment. So you can say that difficulty deferred payment is something like there's a problem of borrowing and lending. There's no loan. Okay, you cannot do loan if you do the system butter, the butter system. Okay, so under the barter system, the contract involving the future payment, credit transaction, the owing, they cannot take place. They cannot take place if they do this barter system, because once you have one goods, you change with another goods. So for example, you want to hutang, you want to, okay, I will lend you money, I will lend you. So how you want to lend, or how you want to give this person owing you money? How? Owing you, tak boleh, cannot. So difficult to have a deferred payment. Okay, next is we have problem of divisibility. So the problem of divisibility here means how to exchange goods of unequal value. Okay, if you have one cow, for example, okay, one cow, and you want to exchange with clothes. Okay, if a household, they wants to sell his cow, okay, you have cow, but you want to sell his cow to get the exchange of clothes that equal to the value of half of the cow. Okay, the cloth that you want equal to value of half of this cow. Okay, so you cannot do so without killing your cow. You cannot exchange the clothes without kill your cow. Okay, so in this case, there are lack of divisibility of goods that makes barter system exchange are impossible. Okay, that's a problem of divisibility. Okay, next is difficulty in accumulating wealth in material form. Okay, it is very difficult for the people to store wealth. I mean, it's very hard for you to store this kind of wealth. We call all the things that you would exchange. Okay, we call as a wealth. Okay, for future use in the form of goods like the cattle, wheat, potatoes, and so on. So holding the stock of such goods involve costly storage. It's very it's hard for you to keep. For example, you have wheat. Okay, wheat ni selalunya gandum ni tak tahan lama. So if you keep that gandum too long, maybe the quality is not same. Okay, maybe people is not needed that gandum. Okay, so holding the stock, this kind of stock, okay, is going to cost you very costly for you. Okay, and lastly, the problem of system barter is problem of portability. Okay, lastly, we have problem of portability, because some of the goods that maybe you want to exchange is very big, so it's very problem for you to keep this kind of big things. And another problem for barter system, if you do a business, okay, how you want to measure your profit. If you don't have money, now you know the profit or loss for the business is based on their money, kan? So if you do the barter system, how you want to see your profit? So you cannot calculate your profit if you just do the barter system. Okay, next, the function of money. They has 4 function of money, okay, in the economy: medium of exchange, unit of account, store of value, tools for standard of deferment payment. Okay, we see one by one. Medium of exchange. A medium of exchange is an item that buyers give to seller when they want to purchase goods and also services. So a medium of exchange is anything that is readily accepted as a payment. So the function of money first is as a medium of exchange. So money act as the mediator, or we can call it intermediary between the buyer and seller. So between the buyer and seller, there is something in the middle. That middle is money. So for example, if the shoemaker, they wants to exchange accounting service for the shoe. Okay, the shoemaker, they want to exchange accounting service for the shoe. So the accountant now exchange accounting service for money. Okay, before in the system barter exchange, I want your accounting service. Okay, then I will exchange accounting service with my shoe that I have. Okay, so now with this medium of exchange, okay, the accountant, now they exchange accounting service into money. Okay, so this money they can buy to use shoe. So this money, okay, is actually to serve as a medium of exchange. Okay, and in order for you to serve this kind of medium of exchange, you must ensure that money, they must be widely accepted as a method of payment. Before you use money as a medium of exchange, they must have the acceptance, widely accepted. Means that for example, you must ensure that people who do this buyer and selling things, they must accept money as their method of payment. Of course, you see now everyone accept money. I mean before. Okay, means that you must what we call make sure everyone accept money as the method of payment. If not, there is no medium of exchange. Okay, because you have buyer, seller. Okay, before you can just exchange like this anything. Now no. Okay, in order for you to buy something, you must have money in the middle. So sebab itulah if you pay something, okay, you get things. Okay, if you is a seller, give money and you also accept money. Okay, second one, unit of account. A unit of account is the yardstick people use to post price and also record a debts. So it's a good value in dollar. So actually unit of account means that the money is the ruler by which other value are measured. So if you do the money, you can easy to measure the value. The more higher the number, okay, means that it's actually higher the value. So for example, an accountant may charge 100 ringgit file your tax return. So that 100 you can purchase 2 pairs of shoe, which consists of 50 ringgit per pair. So it's actually it easy for you to measure and calculate. That's why one function of money, unit of account. Okay, like contohnya you betul 2 pasang kasut. Okay, 1 pasang 50 ringgit. Okay, this thing is actually unit of account. Easy for you to measure and easy for you to calculate later. Okay, then we have store of value. Store of value is an item that people can use to transfer purchasing power from the present to the future and hold some wealth in money form. Okay, example, the shoemaker just now, okay, we use as example of shoemaker. The shoemaker trading shoes from the accounting service, but she risks having her shoe go out of style. Means you risk yourself to put your shoe, okay, out of style. Okay, if she keep the shoe in the warehouse longer, the future use, okay, for the future use, if you have a shoe and you keep in your warehouse longer, of course that shoe is not going to follow the up to date anymore. Okay, that shoe is not up to date anymore, so the value of the shoe going to decrease. Okay, but this function, this money, okay, money, there are easier way to do this store of value, storing value, because you know that if you don't need to spend it, for example, you have 100 ringgit, okay, you don't want to spend it, you can keep this 100 ringgit until forever, until next year, until next month, until forever, and this still a money and they still have a value. Okay, that's why if you keep shoe for long time, the value of shoe going to decrease. But if you keep money, okay, you store and keep the money, they still have value. Even though the currency is down, money is still money, because money, even though it's 100, next year also you use, it's still 100 ringgit, still have value, still you can buy something with 100 ringgit. Okay, that's a store of value. Okay, the fourth one is as a tools for standards of deferred payment. As I told you just now, deferred payment is something that you give loan, the owing, right? So money is one of the function, is as a tool for standard of deferred payment. So money is usable to make purchases. If it might also be acceptable to make purchases today that will be paid in the future. Okay, as you can see, example, loan. Okay, loan and future agreements are stated in the monetary terms. In standard of deferred payment is what allow us to buy goods and services today and pay it in tomorrow. For example, you want to buy furniture, okay, you buy furniture example, and you can still owe the money and you pay maybe later, because you know money is a medium. Okay, so you can still get this thing and you still need to pay even though you paid later. But if you do the barter system, you cannot do like this. They cannot become a medium of deferred payment. Dia tak boleh berhutang. Okay, sebab there's no medium of exchange in the middle. So while if you use money, so it's one of the tools for standards of deferred payment. That's why macam loan kan, kalau you pinjam duit, okay, you still kena bayar the duit. Okay, even though you pinjam, dia masukkan duit dekat account you, tapi monthly you still need to pay because it's money. Okay, now we move to the kinds of money or types of money. Okay, we have a commodity money, fiat money, currency, and also two types only, sorry, commodity money and also fiat money. So what is actually commodity money? Commodity money example you can see here, gold, silver, cigarette. Okay, it takes the form of commodity with the intrinsic value. So unlike other form of money, commodity money has store the value. They have value even if the nation is no longer use a commodity money. A form of money still have value. Okay, you can see like gold and also silver and tobacco nowadays, they still have uses outside of of its use as a medium of exchange. Like you see gold nowadays, gold, the value of the gold is higher than the money itself. Okay, so gold you can see it's not the form of money, but it's very valuable. So the economic term, the intrinsic value, it means that it have value other than use as a money. Means that you can see gold, silver, they have value other than use as a money. Okay, for example like gold, okay, like gold you can do the jewelry and it's still valuable. So that's why gold, silver, cigarette, tobaccos all is actually we call it as a commodity money. Okay, you can see even if one day this world don't use money anymore, this gold and silver, they still have value. Okay, and acceptable, they're accepted by all people around the world. Then we have fiat money. Okay, fiat money is use of money because of government decree. Okay, it does not have an intrinsic value. It means that fiat money is the money that banknotes and shilling that you have, a coin that you have, is actually a fiat money. Okay, means that fiat money gives central bank greater control over the economy because they can control how much money is printed. Because you can see this money, they actually don't have any intrinsic value like this, like gold and silver. Okay, once it's done, money finish. Okay, so they don't have intrinsic value. Okay, the example of the fiat money is coins, currency, and also check deposit. Okay, next we proceed. Money in the economy. So money in the economy, we have a currency and also demand deposit. So currency is the paper bills and coins in the hands of the publics. Once the money that you get in your hand, okay, that RM, that USD, okay, we call as a currency. So each country, they will have different currency. Everyone know that it's Malaysia RM. If Japan yen, okay, that's a currency. Then we have demand deposit. Demand deposit is regular checking account, saving account, or money market account. So actually the balance in the bank account that the depositor can access on demand by writing check. You are the depositor. Okay, you have your account saving, or we call it as a demand deposit. Now let's move to our central bank in Malaysia. Okay, we call as a Bank Negara Malaysia, or BNM, Malaysia National Bank. Okay, so BNM, Bank Negara Malaysia, is a central bank for Malaysia and is established on 26 January 1959 under the Central Bank of Malaya Ordinance 1958. Okay, so this is the governor of Bank Negara Malaysia. We start with 1959. We have Tan Sri W.H. Wilcock. Okay, we have Tun Ismail bin Muhammad Ali. Okay, this is Dr. Siti Asmah punya abang. Okay, then we have Tan Sri Aziz bin Taha, Tan Sri Datuk Jaafar bin Hussein, Tan Sri Datuk Ahmad bin Muhammad Dun, Tan Sri Datuk Sri Ali Abdul Hassan bin Sulaiman, and we have Tan Sri Datuk Sri Zeti Akhtar Aziz. They start on May 2000 until 34 of April 2016, and they have two more governor that is not here. On the 1st of May 2016 until 15 of May 2018. Okay, we have Tan Sri Muhammad bin Ibrahim. Okay, Muhammad bin Ibrahim. And our latest governor now is from 1st July 2018 until now, okay, present, is Datuk Nur Samsiah Muhammad Yunus. Okay, Datuk Nur Samsiah Muhammad Yunus. So this is the governor of Bank Negara Malaysia. So what is the purpose? You can see in your money, okay, in your money you can see the people have signed there in the money. Okay, that's a sign of the governor, Bank Negara Malaysia punya governor. Okay, dia orang lah yang sign kita punya duit tu. Okay. Okay, but what is the objective of the Bank Negara Malaysia? First, to issue the currency and keep reserve, safeguarding the value of currency, to act as a banker and financial advisor to the government, to promote monetary stability and sound financial structure, to promote the reliable, efficient and smooth operation of national payment and settlement system, and to ensure the national payment and settlement system policy is directed to the advantage of Malaysia, and lastly, to influence the credit situation to the advantage of the country. Okay, this is the objective of the Bank Negara Malaysia. If this question come out, this thing you can just memorize. And by this one you can put F2 S2, to promote the reliability, efficient and smooth operation of national payment and settlement payment. And okay, nombor 5, to ensure that the national payment and settlement policy is directed to the advantage of Malaysia. And lastly, to influence. Okay, so this is the objective, and because this is the not the calculation, so that's why I just do the video. Okay. Alright, organizational structure. Organization structure. Okay, the governor is the chief executive officer of the bank and assisted by 2 deputy governors and also 5 assistant governors. So basically, the governor means the CEO. So under the CEO, they have their assistants. Okay, deputy governors ada 2, lepas tu ada 5 assistant of the governors. So the department in the bank are organised in the 5 division. In the bank, we have the economic department, investment and operation, organizational development, supervision and also regulation. Alright, now we move to the bank and the money supply. Okay. So every time a dollar is deposited into the bank account, a bank total reserve will increase. So the bank will keep some of it on hand as required reserve, but it will loan the excess reserve out. So when that loan is made, it increase the money supply. So this is how the bank they create the money and increase the money supply. So you can see banks can influence the quantity of demand deposit and the economy of the money supply. Okay, in the banks and the money supply, okay, they have 2 terms. Okay, we have reserve. Okay, reserve is actually deposit that banks have received but not have loan yet. Okay, that's reserve. Okay, deposit of bank that have received but not have loan yet. So in the fractional reserve banking system, banks hold a fraction of the money deposit as reserve and lend out the rest. For example, you have this, you deposit the money, okay, deposit, and some amount of this money they put as a reserve. Okay, some they will give loan. That's why you can say how you get, even though you have 1 million in bank, doesn't mean that 1 million exists. They use this 1 million. Example, you put 1 million here, they will reserve maybe 10%. Okay, 10% of 1 million, how much? 100k, for example, reserve 100k. Then another 1900k, they will do as a loan. So that's how they, orang kata circulate, pusingan. They do all this cycle in the bank. That's how bank get the money. Okay, so in the fractional reserve banking system, bank hold the fraction of the money deposit at the reserve and lend out the rest. Okay, and we have the reserve ratio. Reserve ratio is the fraction of the deposit that banks hold as a reserve. Okay, so money creation with the fractional reserve banking. So when a bank make loans from its reserves, the money supply will increase. So the money supply is affected by the amount of deposit in bank and the amount of bank's loan. Okay, deposit into the bank are recorded as both asset and also liabilities. Okay, the fraction of total deposit that bank has to keep is reserve is called as a reserve ratio, and loans become an asset to the bank. You can see here, this T account show a bank that accept deposit, keep a portion of reserve and lend out the rest. You can see deposit is actually whatever you come pay to the bank. Okay, whatever saving that you have deposit to the bank is actually the bank liability. So how they want to become this liability to asset? Okay, from this amount of money they will reserve 10, for example, deposit RM10 because you said RM100 and you reserve 10%. So how you want to calculate this? So 1 divide by 100, how much? No, sorry. Is 10 divided by 100. You want to see how many reserve ratio. Okay, the reserve ratio is the reserve amount divided by the deposit that you have. So it's actually 10% of reserve ratio. So from this reserve ratio, the balance of the deposit, the balance of the reserve, they will do as a loan. Okay, that's why they get the total asset equal to total liability. So that's why even though you have 1 million ringgit in your account bank, doesn't mean that it's actually the 1 million is not there. Okay, the bank is used that 1 million to do all this thing. Okay, to reserve and give loan. Okay, but if you want to withdraw, of course, because it's still your money, it's still your own money. Okay, is your own money. So of course you can withdraw with 1 million. But how the bank keep their asset is, by doing like this. Okay. Okay, when one bank loans money, that money generally deposit into another bank. Bila you normal, bila you have loan, okay, they use other people money as a loan. Okay, they will deposit this money to that people punya account. Okay, so that create more deposit and more reserve to lend out. Bila you dah tepat sini, contohnya you daripada 900 daripada 50 million contoh, daripada sini you pergi pula reserve lagi. Okay, after this you have loan, then you reserve lagi, you do the same things over and over again. Okay, so this is how you get more deposit and you get more reserve to give people loan. When the bank makes a loan from its reserve, the money supply will increase. Okay, when they do all this loan, money supply increase. That's why people always say, how bank make money? By giving loan. Because inside the loan they have interest. If you see, if you RHB punya loan, right, the interest really high. If you pay, you borrow 20k, you need to pay 60k, 40k is a interest. Okay, this is how they make money. Okay, the bank make money. Okay, then we have the money multiplier. How much money is eventually created by the new deposit in this economy? Okay, you can see the money multiplier is the amount of money the bank system generate with each ringgit of reserve. Okay, is ringgit of reserve. Okay, we call as a money multiplier. Every time you reserve. Okay, reserve. For others, we call as a money multiplier. So the Bank Negara Malaysia have 3 tools in the monetary toolbox. Okay, they have an open market operation, changing the reserve requirement, and also changing the discount rate. We go one by one. Open market operation. So BNM, they conducts open market operation when it buys government bonds from or sells government bonds to the public. So when BNM sells government bonds, the money supply will decrease, and when BNM buys government bonds, the money supply will increase. Okay, when they sell the government bond, money supply decrease, and when they buy government bonds, money supply will increase. Then they have a reserve requirement. So BNM, Bank Negara Malaysia, also influence the money supply with the reserve requirements. So what is actually reserve requirements? They are the regulation on the minimum amount of the reserve that bank must hold against deposits. Okay, next we have changing the reserve requirement. So the reserve requirement is the amount, okay, in percentage of the bank total reserve that may not be loaned out. So the increasing the reserve requirement decrease the money supply, and decreasing the reserve requirement increase the money supplies. So if you increase the reserve requirement, you're going to decrease in the money supplies, but you decrease in the reserve requirement means you increase the money supply. You must understand this increase and increase thing. Okay, changing to discount rate. The discount rate is the interest rate of BNM charges banks for loan. So increasing in discount rate going to decrease in money supply. So increase in discount rate, decrease in money supply. Decrease in discount rate, increase the money supply. Okay. Problems in controlling the money supply. BNM's they control the money supply is not precise. So BNM must wrestle with 2 problems that arise due to fractional reserve banking. So BNM not control the amount of money that households choose to hold as a deposit in banks. So BNM does not control the amount of money that bankers choose to lend. Okay, these are the major category of financial institution. Okay, we have a commercial bank. The description, they state intentional businessmen to provide the checking and saving accounts and make loans. Okay, we have a JP Morgan, Chase, Bank of America, Citibank, Wells Fargo. Then Thrift, Saving and Loan Association, Mutual Saving Bank, Credit Union, and that offer checking and saving accounts and bank loans. Charter One, New York Community Bank. Insurance companies, we have a policy insurance, yeah? Firms to offer policy which individuals premiums to insure against loss. We have Prudential and a lot, Mutual, Public Mutual, and so on. Okay, then we have mutual fund company, firm that pool customer deposit to purchase stock or bonds. We have Fidelity, Vanguard, and so on. Pension funds, institute that collect saving from workers throughout their working years and then invest the fund of the retirement benefit. Okay, we have this thing. Security firms that offer the security advice and buy and sell stocks and also bonds for client. Okay, and we have investment bank, firm that help corporation and government raise money and selling stocks and bonds. Okay, we have this one, Danske Bank, Nomura Security, and so on. Okay, this is a summary for what we learned today. Okay, the term of money, they refers to the asset that people regularly use to buy goods and products, goods and services. Okay, money serves three functions in the economy: medium of exchange, account of unit of account, and store of value. So community value is money that have a intrinsic value, that fiat money, money without intrinsic value. The Bank Negara Malaysia, BNM regulates Malaysia's monetary system, and it controls the money supply through open market operation or by changing reserve requirement or the discount rate. Okay, when the bank loans out their deposit, they increase the quantity of money in the economy. Okay, bila bank loan ni you give as a deposit, means you pergi hutang dekat orang, so you're going to increase the quantity of money in the economy. So because BNM cannot control the amount of bankers choose to lend or the amount household choose to deposit the bank, BNM's control the money supplies is imperfect. Okay, that's a topics that you're going to learn today. This is my last class. Okay, but before that, I want you to do some simple assignment, because that's from that assignment, if you submit before this class finish, okay, I will take your attendance. If not, I will not take your attendance. Okay, in order for you to I can take your attendance, okay, please answer this question: the ways to save money during the pandemics. Okay, you can just send to me 1 pages with your name and also your ID and email to me. Okay, that's all for today. Bye bye.